So how many people came, your main driving reason was to learn more about capital, raising capital? Cool. Yeah. This is gonna hopefully, like, I want some knowledge bombs. Like, I want some mind explosions. I want some mind explosions, like aha moments, and I want y'all to share them. Like, get ready. If you're not ready, like, stretch it out, because this is what it's all about. This is what it's all about. Because you can do everything. You can, let's say everything you've done to this point, like, you can learn, you can strengthen your mindset, you can create deal flow, you can learn to estimate repairs, you can learn to evaluate deals, but if you can't raise money, game over. Like you are done. So the cool thing is this. There's so much money out there that anyone can do it. Like, you really can. There's so much money available that it's just insane. And this is the biggest, I think I mentioned this earlier, this is the biggest excuse that I hear. It's like, I can't invest in real estate because I don't have any money. That was the main reason I was attracted to real estate, because I didn't have any money, right? You hear about all these no money down strategies and creative real estate and all this kind of stuff. That was the main thing that attracted me to real estate, was that, there's an opportunity for a guy like me that had nothing to get my little piece of the pie, right? And not only to make money, but quit my job and do all these awesome things that I had heard about and I started reading about in books. So if anyone, we talked about letting things go this weekend. So if lack of capital is something, like, if that's a belief that you're holding on to, I can't do it, then you got to, like, I encourage you to let that go, because there's so much money available. All right, so what is this? So the truth is that you will never start doing deals until you make up your mind and become committed to finding great deals and providing value to the marketplace. So once again, like we talked earlier about belief systems around money and things like that. This is absolutely a belief system. And this isn't really even about money. It's about providing value to the marketplace. It's all about providing value to the marketplace. And as you progress as an entrepreneur, I'd encourage you to think like that, in terms of, we always want to look at, profit and loss statements. We're going to look at numbers on potential deals. But the further I go along, the more and more I get into, like, how am I really adding value here? And it sounds kind of cliche. You hear that a lot, like adding value. But how am I adding value here? How am I helping others? Because I've determined the more people that I help in my life, the better that my life's going to be, and my financials are going to be, and that my family's going to be provided for if I'm focused on helping more people, right? That's just the way the world works. If I'm focused, like, honestly, I was focused on who when I started this? Really me. Like, I was just like, how can I do this? How can I get this? How can I make this money? How can I quit my job? Me is really where that focus was. So now it's like, how can I create value? How can I really help people? Because the more and more people that I can help, the better things, selfishly, I know things are going to be for me, but at the same time, I'm helping and serving others. And all that cliche kind of stuff that we hear, I happen to believe it's true. And so that's going to be a big theme. Oh, shoot, that wasn't supposed to be in there. So that's going to be a big theme about raising private money. And so I shared this earlier, and this is where this applies again. Is because this is going to be critical that you understand, I think you all do, how important leveraging good debt is how impactful it's going to be for your future, and really, if you begin to raise, let's say $1 million or $2 million or $3 million, how many lives are going to impact in that process? Because your private lenders are going to become your best friends. We have our Christmas party, all of our private lenders, not all of them, but our private lenders are invited, and they come out to our Christmas parties. They come and hang out at our office. I met with some of my lenders a while back, and they started working with me 9 years ago. They were doing pretty well, and then her husband retired, so he rolled over his retirement account from his company to Quest, and they invest that with me. His mother passed away, unfortunately. He inherited a large sum of money, as did their son, who also invests their money with us. Their son got married. This kid, he's like in his mid-20s. His parents, who live overseas, are very well-to-do. She's got a very good chunk of change, I would say, that she's began investing and lending to us. They have some cousins who've been investing with us for years. Not a lot, a little bit. She told me last year, she said, so-and-so, they have a company that they're attempting to sell right now and for 7 figures. They want to invest it with you whenever that company's for sale. Guess what's closing in the beginning of May? That company. So we had a little set down. She's like, we're about to have $2.5 million invested with you. So, and you know what? One of the purposes was the meeting was for. She's like, we don't know how much money you have with other people, but we want to keep our money working. Can we negotiate or secure, first dibs on all of your flip properties? They want on my flips. Why? Because I typically pay 10% on my flips. Short-term money, it's not that big of a deal. And if we're buying something intentionally with a rental property, I usually don't want to borrow any more than 8 or lower. So, also with $2.5 million, this particular lender, all of my interest is accrued. So imagine if you were going to buy and flip $2.5 million worth of real estate next year, and you did not have to make a single payment or one single draw for construction repairs. I'll show you all HUD statements. We buy houses and get $40,000, $50,000, $60,000, $70,000, $80,000 at closing for the rehab, right? So none of this to brag, to boast. It's just showing you what happens all the time. All the time, every day. Every week we buy houses. This is the structure that we use. Now, not all my lenders have accrued interest. This particular one does, and they happen to have a lot of money. But this is because we were talking about going to these events and going to these meetings, because 9 years ago we went to a meeting. We started a conversation. We met at a Starbucks. We borrowed money from them one time, and we performed. Then we borrowed money a second time, and then a third time, and a fourth time. Also, during our relationship together, guess what they did 5 or 6 years ago? Loaned to someone else. Guess what happened? No bueno. He came back and said, hey, Brant. So, this is just showing you, this is how the game is played these days. Do you think if a bank when a bank loans money, does that mean they have the money in the bank that they're loaning out? They're leveraging. They have what? Is it 2%, 5% of the money they're loaning out? They're borrowing money and lending money. They're doing exactly what we do, right? Centuries ago, or even 100 years ago, not everyone knew how the game was played. One of the benefits of living in the information age is we have access to information, right? People did not know how the game was played. Even in today's day and age, people still don't understand the Federal Reserve, right? Except that it's a freaking racket. So this is our opportunity, essentially, to play the game like the game's been played on us, you know. And one of the conversations is, you're either sitting down to eat or you're being eaten at the table. It's really one of the two. So this is our opportunity to be like the banks, right? When we go and talk about owner financing and leveraging other people's money. And that's what it is.
Are you at the table or are you on the menu?
Yeah, are you at the table or on the menu? I butcher quotes all the time, so thanks for correcting me. So this is all about the power of leverage. But I'm going to strongly encourage you guys. You leverage with a purpose, right? You leverage for cash flow, for sustainability, and you leverage with a purpose. So here's the thing. That whenever I first began raising private money that first year, I got to a point where I had multiple lenders wanting to work with me. And I remember talking to my wife about it. And I was like, I've got some potential lenders and be able to buy some more houses and things like that. And my wife was like, that's great, that's awesome, I'm excited for you. She's like, why do you seem stressed out? And because I was nervous about it, right? Because it was humbling to me, but I knew that these were people who were entrusting me hundreds of thousands of dollars with their retirement money, for money that they had most likely worked years and years and decades for, and they were loaning it to me to buy real estate. Okay? So this was my third year in the business, and I'd done like 20-something deals, close to 30 deals. I had a little bit of experience, but 2009 was still a scary time, right? I'd never been an entrepreneur in a freaking down market like that, so it was a little bit scary. So I was nervous, and I remember having a conversation with my wife, something to the effect, I'm like, babe, if anything goes wrong though with any of this stuff, like I'm not going to be able to live with myself if I don't pay my lenders back. So we will sell everything. We actually lived in a house then. I'm like, we'll sell our house. I'm going to do whatever it takes to pay my lenders back. So never tell my lenders anything like that, but that's always been my mindset. From that, since I started in this business, is my lenders will always be paid. I think some of them feel it, can sense it, can tell it, right? Remember I talked about that sixth sense that people have? And so I encourage you guys strongly, please have that same mindset. Right? That you are not over leveraging, that you are leveraging with a purpose. You're leveraging with a sustainable business model, like you're looking at ways to increase your cash flow. It's not just for yourself, so that you're not putting yourself in bad spots. You're not doing stupid deals, and you're not being a poor steward with your investors' capital. Because it takes a lifetime to build a reputation. It takes how long? Seconds. You can speak up, it's okay. Like seconds. One deal, you can ruin your reputation. And you won't last long in this business with a bad reputation, right? But with a good reputation, your private lenders will become like banana trees. Does anyone know what I mean by that? my old friend like that. My old friend business partner used to call private lenders banana trees. Banana trees like those, they're like a tree, this weed things in your backyard, and you can kill them. Like we've dug the things up, chop them down with machetes. They just keep coming back. They're kind of like, it's better than weeds. They're not like weeds. So we call them banana trees because they keep coming back, So you take care of them and they keep coming back over and over and over again. That's why I said I've never had a lender that hasn't reinvested with our company or came back to reinvest with our company. We had one that did not reinvest with us. He came back. We just politely said no. for stories because he was not a nice person. Well, we did a deal with him, and less than a month into the deal, he said that he wanted his money back for another deal. And we're like, that's not the way it works. And I'm like, and our plan, we were going to keep the loan out for 6 months and refinance. And he needed it right then. He wasn't telling us why at first, and he's like, well, I've got another opportunity. Well, okay, because like, one, that's worked for us. Two, it's going to cost us money unless we're going to charge you. And then he didn't want to pay to get his money back, right? Because we're going to have to refinance with another, place it with another lender, et cetera, et cetera. So we did it. We ended up doing it. It's like, okay, fine. And he was kind of rude in the process. And then he comes back to work with us. So we're like, no, man, you just screwed up my presentations where I can't say that every lender's worked with us twice. So that's the only reason it hasn't. But he came back. So the proof is that it works, and if you do it right, it's sustainable. It's such an amazing investment for them. It's such an amazing investment for them, and the cool thing is too is they are looking for people like you. So I want to talk about 4 other financing options real quick, and we're going to get focused back on private money. So what are other options that you can finance real estate with? You can buy real estate cash, you can use banks, you can use partners, and you can use hard money. These are all options that you have. Is there anything wrong with using your own cash to purchase real estate?
Yes, you run out of cash.
Well, everyone's cash is limited at some point in time. Everyone else's cash theoretically is too, but it's really never, it's never going to run out of other people's money. You're only going to run out of your own money. So sometimes we use our own cash to, if, for whatever reason, we've got some money sitting and we're going to refinance or whatever. But most oftentimes, 99% of the time, it's all private money. Personally, I like to borrow private money at 7 and 10%. And loan it on short-term loans for 12 to 14%, 2 points, kind of like what Mitch does with his hard money lending company. And that's what we do with our cash. Make sense? So some of you guys, if you start really get good at this, you get to a place where you're going to raise more money than you can invest. And that's the problem that we have now. That's the problem that Mitch ran into years ago. So that's why he started a hard money company. So we loan our private lenders money out. We borrow at 8 to 10% and loan it at 12, 14%, 2 or 3 points, and win. Everybody's happy. But so if you have cash, I'm not saying that real estate's not a good place to invest your cash. There's just some downsides to that. If you need that cash back for some reason, if there were a catastrophic event, you need the cash back. If there was the house was whatever, it was on fire. So insurance claims and adjustments are quick or slow? Slow. So that's why there's a lot of reasons why even though financial, it may make sense on a spreadsheet, a lot of reasons like you may not want to use your cash. Banks, we still use banks for long-term financing, kind of like what Mitch talked earlier. We're getting a guidance line of credit for rental properties. We still utilize lines of credit, and we use construction loans as well sometimes. We can get those at about 5%, and we're doing a partner right now with a lender and a line of credit for like $1 million loan with a bank. So we utilize banks when it makes sense, but it's a headache. Like I'd rather pay a little bit more with my private lenders than use the banks. Okay? I'd rather pay more because of the headaches of dealing with the banks. But on our day-to-day purchases, the houses that we buy each week, we don't use the banks. We use our private lenders. Why? Because of speed and ease. Speed and ease. Partners. So I used to do a lot of partnerships. So in the beginning, I found that my partnerships were really valuable for me because they kept me going in year 2. I see that partnerships can have a really They can be a really useful tool depending on what stage you're at and depending on the types of deals and depending on the partnership. So the most common, I guess, reason, a justifiable reason to put together a partnership is that there's two or more parties that bring different and necessary characteristics or items to the partnership, right? So if your expertise is marketing and finding notes, and your expertise is marketing and finding notes, and you guys are like, hey, let's form a partnership. Like, what value are you adding that he hasn't already added, right? But if your expertise is marketing and finding notes, and your expertise is raising capital, and you suck at marketing, you hate marketing, and those types of things are great partnerships. So year 2, and I started putting together real estate deals, I had the knowledge, time, and experience to go out and find really cheap real estate and buy it and manage it and all that kind of stuff. Well, my partners, did they have any of those skill sets? Did they have the time, desire, and energy to do all that stuff? Nope. But what did they have? They had money. That's a characteristic. That's some of the ingredients of a good partnership. But a lot of times I see a couple of investors get together and they have the same exact skill sets. Probably not so much. The other thing that I see happen is that newer investors, and I know this because this is what I went through. I see people who lack confidence or education in a certain aspect, or you're just starting out, you feel the need to have a partnership because it just feels safer. Okay? So if you're feeling like you just want that safety, you want to really step back and say, is this really helping me hit my goals, results, et cetera, et cetera? Like, see what other, tangible aspect that partner's bringing that's going to help you guys grow. Because when you form a partnership, you really want to make sure there's some synergy going on. Okay? The two of you, 1 + 1 should equal 3 or 4 or 5. Does that make sense? 1 + 1 should not equal 2 in a partnership. There's going to be some synergies where things start to happen because he's focusing on money, you're focused on notes. You're going to be able to not only do the same volume that you could do individually, but 2 or 3 times that amount, right? So partnerships are, really, really good in certain situations. In certain situations, they're really, really bad. They weren't necessary. One of the things I learned my first year was that, a partnership is like a marriage. It's another company that's created. It's another tax return or K-1, and it's a whole nother set of books. So there's a lot of stuff. So I encourage people, if you're just doing deals, it's better to use some type of joint venture agreement, do a few deals together, and make sure that's something that you really need to form a partnership with. Because a lot of times you may say, after 2 or 3 deals, yeah, I don't think this is going to work out so well, or I could have done that on my own. So that's usually the best way to handle that. Yeah, it was a joint venture agreement, which is usually like a 1 or 2 page document, that you could do yourself. I'd recommend having an attorney, but they're fairly simple to do. And then of course there's hard money. Yes, sir.
I have a private money guy that he wanted part ownership of the property.
Mm-hmm.
And they were buying hold. So I set up an LLC, 50-50, but his 50% has absolutely nothing to say in managing the company. His 50% is only equity of it.
Yeah.
So I can do anything I want. He cannot stop.
Yeah, that's an important point too, is control. And that's what we're talking about with the equity participation mortgages as well. Like, control's really important. Yeah, that's an important point as well. Like, keeping, you don't want to keep control, unless your partner has, some skill sets where he needs to be in control of certain aspects. That's a good point. Of course, everyone knows hard money. I don't know how far deep we need to go about hard money, but 12 to 14%. 2 or 3 points, sometimes more. While hard money lenders used to be primarily asset-based lenders, they're more like the banks today. They're looking at your credit reports. They may be looking at your personal financial statement. You're bringing money to closing for sure. You're paying repairs out of pocket. So are they conducive to your cash flow situation? Not really. Are hard money lenders going to make it easier for you or more difficult to scale your business? Impossible, quite frankly, at some point for all of us, right? So my thing with hard money lenders is in the beginning, if you've never done a deal, can you go out and raise private money? Absolutely you can. And I help my students do it all the time. If you're on your own, if you've never done a deal, I recommend that you do some deals, maybe at least one, but 2 or 3 deals in hard money before you progress to private money. I do. And the reason why is because what I mentioned about, like, that is people's hard-earned money, right? So there's some things, if you're doing this on your own, right? If you don't have someone looking over your shoulder, because what if that deal isn't structured right? What if you didn't get a title commitment with your private lender, or the insurance, you didn't get insurance, or there's a survey, there's some big situation, and you're just learning. Knowing that 9 out of 10 businesses fail, if you're going this on your own, I'm kind of speaking to people who aren't even here, but if you're going on this on your own, I recommend a hard money lender, because a hard money lender is a really good safeguard for you in the beginning. Because a hard money lender is a professional lender, and all they do is what? Loan money for real estate investors to buy distressed properties. So if a hard money lender tells you no on a potential deal, that could be really good feedback. I can share a story about that as well, because my buddy, who I told you about in year 1, started doing some deals. I had progressed. I'd done 4 or 5 deals at that time, all with hard money. Bought them, fixed them up real quick, refinanced them. Everything's like working like clockwork. So I started getting a little bit of an ego and maybe a little bit careless, maybe. And I had a deal at that point in time. Most of my rehabs were paint, carpet, countertops, maybe, like really basic. And so I was ready to take the training wheels off a little bit. And I was looking at a rougher deal, a much bigger rehab with some ugly foundation issues. It had issues all over the place in a rougher part of town. And so my lender, I called him up. He met me over there, met me at the property, and he walked the property, and I noticed his eyebrows were raised a lot during the walkthrough. His eyebrows were raised really high, matter of fact, now I think about it. And long story short, he told me no. He's like, I can't loan to you on this one, Brant. And so I'm getting like the Armando Montalongo complex. I'm like, what do you mean you can't loan to me? I'm Brant Phillips, done like 4 deals. You've probably only loaned on 1,000 in your life. And so he went into his reasons. He's like, Brant, your rehab budget's way low. I don't like this area because of this. And he gave me some good data. So I still got a little pissed off. And I'm like, well, I'll just call another lender. I'm going to call this guy or that guy. I know some other guys to call. So I'm getting ready to start calling some other people. And I'm like, hold on, Brant. Let's think about this for a minute. One, I trust David at this point. Like, he's a good guy. Like, we're kind of buddies now. I'm like, he's been doing this longer than me. He's in the business of lending money on deals like this, and he doesn't want to lend on this deal. Maybe I should just walk away and move on to the next one. So that's what I did. And I swallowed my pride and thanked him for his feedback. So that's why I think that hard money lenders are really helpful when you're starting out. And then I progressed, to private money. And he's still irritated about that to this day because we still see each other and you and your private money, Now, I created a product that was called the Simple Private Money System years ago. Oh, I see you're teaching and coaching people raise this private money, Yeah, I am, because it's a lot better. Still love you, Dave. So, all right. So, any questions on these other sources of capital? They're all there. They'll always be there. There's times when we can utilize them, but we just don't very often. Percentage-wise, it's like 1% of the time. So I love this quote that the ability to raise capital is the number one skill set of an entrepreneur. So this is in some markets, this probably is interchangeable with marketing in certain markets. Marketing is so important to you guys. All the fundamentals are important, but this is what Kiyosaki says about this. I agree with them. Marketing's also huge. Of course, also is rehabbing. Everything is important, but this is so critical. These are some of the slides we talked about with your own cash. If you use your own cash, you can close fast. There's no red tapes, no loan documents. You can save whatever you're going to borrow against. You don't have holding costs, but you lose your leverage and you increase your risk, right? Just your exposure. Banks, we talked about that. They're good for long-term loans like rentals, lines of credit, and construction loans. These are the terms of hard money. Typically, you're going to pay points, 1 to 4 points, 12 to 15% interest rates. These are 6 to 12-month loans. A lot of them are 6 months. Why are they set up for 6 months? Because they know that you're going to have to renew and extend, and what are they going to charge you then? More points, at least a point. Man, that used to annoy the heck out of me. So we set up all of our private lender loans for at least 1 year. We don't do any of the 6-month stuff. They're asset-based loans, sort of. A true asset-based loan only cares about the asset. That's how they used to be. Now they want to know about you too. I say typically, if you buy them cheap enough, my old lender buddy would say, yeah, if the numbers work, we'll loan you 100%. So if you're buying really cheap, you can't get some 100% financing, but they got to be in the 60-65% range, like solid. And this still is, I believe, the most common financing option for investors. So this is what our competitors do. And so you'll see sometimes your financing, when you plug in financing, it may be the difference on if it's a deal or not. This can be huge, because if you're paying 3 or 4 points and 12 or 15% interest, and you're able to borrow at 8% with no points, how does that change the numbers on your deal? A lot. It changes it a lot. So partnerships, the most common form is a lender and investor get together. Similar skill sets should not partner. Be careful, walk slowly before you do that, before you get married, essentially. That's what it comes down to. Take a long-term view. If you're setting up a partnership to do 1 or 2 deals, I would think twice about that. I would use a JV. Roles must be clearly defined. Who can do what? Who cannot do what? Document everything. Handshake agreement, yes, documented. And it's really not recommended in most circumstances. With the single-family homes that we're talking about, there's not a whole lot of necessity for partnerships. All right, so private money. If I had to boil it down to one thing, private money is about relationships. Private money is about relationships. And I also want to categorize private lenders also. So when I'm talking about private lenders, I'm talking about the type of lenders that we work with. Who do we work with? We work with everyday folks, just good old everyday folks, the people that I like to say they're hiding in plain sight, okay? There's some private lenders who they should really just call themselves hard money lenders. There's some private lenders that have a rate sheet and a website that outlines their terms. They're not a private lender. They're a hard money lender, okay? They're a sheep in wolf's clothing kind of deal. They are basically a hard money lender. We're not looking for them, okay? We're not looking for them. If you come to Quest events or certain real estate networking events, you'll meet these people, and they're an individual, and they may have a large sum of capital to borrow. But if they go talking about 12 and 14% and 2 or 3 points, I mean, you may use them if you have to, but you want to progress to ideal. So the ideal type of lenders are really people that don't have rate and term sheets. They may know what they're seeking. But these are people that we can form relationships with. That's what this is all about.
So real private money lenders don't have rates and term sheets in their back pocket.
Nope. They don't have websites. They don't have business cards, and all. They don't have. If a private lender gives you a business card saying that they're a private lender, they're not ideal. Okay, they're not ideal. Where's my construction manager the other day? He was talking about he's constantly recruiting new guys, more guys, because our volume of construction seems to always go up, and then some guys just kind of aren't as good anymore, and it's kind of like the Tom Brady rule. It's like we treat our contractors like football players. Like, you always got to have a backup, and sometimes like Tom Brady's sitting on the bench and he comes like, oh wow, he's really good, so he's the starter now. So he's always looking for new talent, even with a lot of our guys have been with us 7, 8, 9, 10 years. So he was talking about he's looking for a new carpenter because every contractor in Houston is a little bit busy these days since the flood. So he's looking for a new carpenter, and the other day he's like, hey boss, I think I found a good carpenter. And I was like, oh yeah? He's like, yeah. He didn't answer his phone call. His voicemail was not set up. He doesn't have a website, but he did return my call within 24 hours. And his English is okay, but not great. He's like, so that's pretty much the characteristics of a great contractor. Because when we start looking for contractors, if they've got their voicemail set up, we know they're not a good one. Like, they're too professional for us. There's all these key indicators of a good contractor, of an ideal deal, kind of like we've got all these things kind of laid out. So one of the things with your lenders, if they've got a business card talking about their lending, they're a little too polished for us, quite frankly, okay? So as you begin having these conversations and meeting with people, and I'll talk a little bit more about that in just a second, you're gonna find that private money is attracted to this: good deals and trustworthy investors. It's the law of attraction. So you have 2 jobs. That's really it. If you want to raise all the money that you can ever, you have 2 jobs to do, right? To find good deals and just be a trustworthy person, right? Be a good steward. It means that you are going to manage that asset with honor and integrity and perform, okay? If you do that, like, you cannot break. This law of attraction works 100% of the time. Now, if you bring a bad deal, it doesn't work. If you're a dirtbag, it doesn't work. It's as simple as that.
If it's a bad deal and you mask it's a bad deal, it still works, right?
For a short period of time. I know those guys too. Those guys don't last long at all.
Well, like you said, you've had deal go bad.
Well, I didn't mask that it was a bad deal. Our numbers were good. right? We ended up having to replace a $10,000 sewer line, or something happened with the market, or that the house flood. Well, we still made money on that, but the house flooded right before it went to market. You know, there wasn't that we masked. You know, it's like we've got a solid investing model, right? It's not that every single deal is going to work out the way that you plan. You know, we've had bad things happen to deals. It's that you are bringing good deals. So what is a good deal? Like 70% of ARV minus repairs. Like that's a good deal, that you're using trusted numbers. That's what I mean by that. So we've already talked about this. Why is it so ideal? Speed. No credit checks. Has anyone had a private lender ever ask them for their credit? I've never had a private lender ask for my credit report. They've asked, so when I've assisted my students or raised money for my students, they've asked for my students because they didn't know my student. They knew me. Hey, I don't know this person. They've asked for that only a couple of times. So I used to get annoyed with this. I was expecting them to ask for my credit report, and I didn't do very well in school, so I couldn't really brag about my report cards. So I was hoping that lenders would ask for my credit report. It's like, look, I've been a good boy. Like, I've got a good credit, you know. When I sat down with my banker, he's like, your credit's almost 800. Did you know that? I'm like, no, but thanks. Thank you. Like, I feel like you're complimenting me. I appreciate that. But they don't ask. It does so, like, they don't ask. I tell people, when you say you can raise money with no cash, you have no credit and things like that, it's true. I do encourage you, this is the wealth passage, right? So if you've got issues with credit, right, your finance, you need to be working on that, right? And you need to be improving that. But they typically, my experience is, they don't even ask. Down payments, we don't put down payments on houses. Like what is that? Like, I don't know, how does that work? You put money down to buy real estate? I'd like, that concept is so foreign to me. I don't understand it. I don't. It's just, it's been ingrained. You know, it's the habits rule. We buy houses with 100% financing. That's how we do it, over and over and over again. So flexible terms, deferred payments, whatever you work out with your lender, whatever y'all both agree to with your handshake agreement, you back it up in writing. I mentioned we asked for 3 or 6 months of deferred payments on several of these high-end deals. I just asked. If they said no, was I not going to do that deal? I still would, but why not? You know, the accrued interest thing, that blew my mind that we could even do that. But it was just, let's ask. Let's see. This was years ago. So they're loaning us this money from their IRA. Okay. So they can't spend it. They're not spending this money. They want a 10%. The bottom line is they want a 10% return on their investment. Does it matter if they're getting that check every month or at the end of the month? Let's ask the question. Hey, would you be okay if we just accrue the interest? It's kind of a pain in the butt. We've got like 8 or 9 deals going on. This was way back in the day. We can write the checks and all that, but it just makes it easier for us just to wait until the end and pay it all at the end. Would you be okay with that? I don't have a problem with that. That's fine. We asked. They're okay. That's why we loved self-directed IRA investors. Okay, we love that. We love them. It's ideal for us because they're not touching that money. They're not touching that money. What's that? I'm calling self-directed IRA money private money. Yeah, so I'm putting that in the same column. You know, it's like Will Rogers said, it's not the return on my capital that I'm concerned about. It's the return of my capital. It's the number one rule. Return the money. Number 2, give them that interest. They just typically don't care if it comes in monthly or not. Some of them do, and that's fine. That's fine. No points. We on average pay half a point. We pay about half a point because half of our lenders charge a point, half of our lenders don't. So we pay about half a point. We don't do any deals with lenders charging more than 1 point. Cash at closing. So we're getting 100% financing. This is the thing where Mitch talked about where he's got, built in where they're going to borrow about $2,000 per deal. He calls to reimburse marketing costs. But also, if there's equity in the deal, we already talked about that rehabs do go over budget sometimes, a lot of times. So if your average rehab's going over, say, 10% or whatever it is, like if you've got a $30,000 rehab, it might, help your cash flow if you over borrow, $3,000. When I say over borrow, making sure that it's still a good deal, right? You're still in a very acceptable loan to value ratio for your lender. If you're doing that, what do they care? They don't. The first time I learned about that was my lender offering that to me. She was like, "Do you need to borrow any more on this deal?" I'm like, "I don't think so, but sometimes things happen." She's like, "Well, the money's just sitting there if you don't borrow it. It's not working for me." Okay. I think I'd be okay with that.
What if instead of their request hourly account fee?
We always pay their account fee. We pay all of their fees for the deal, not for their annual fees or things like that. They have like an annual fee, but we pay all of their fees in regards to that transaction. It should not cost them any money to loan money to us. So we always do that as a rule.
What I'm saying is instead of paying
Six one way, half a dozen the other. That might get a little sloppy and ugly. I wouldn't recommend that. You can ask Nathan tomorrow. He'll be speaking here. Yeah, I don't think so. And some of them have different quest fee amounts depending on. They have multiple accounts. They may have a Coverdell. They may have, a Roth. They may have a conventional. So I wouldn't get into that. All right. So where can you find private money? So talk about this a little bit. They're hiding in plain sight. Networking events. I've met investors. I met one investor at a networking event. I'd never met him before. He didn't know who I was. I met him on a Thursday night, and we closed the deal by the following Wednesday. I met him, started talking. I had a deal under contract that we had just put under contract. So happens I put a house under contract today, about to start raising private money for it. And he's like, "I'd be interested." Sent him all the information. We closed it less than a week later. Sometimes it's as simple as that. Most oftentimes it's not. It's not typically that easy. Okay. I feel like one of those commercials for some medicine. Results may vary. Give a little disclaimer there. So, remember when we talked about marketing? One of the rules of marketing is that people need to be touched, right? They need to be exposed to the message, multiple touches. What do you think's true here? Same thing. Same thing. Some of your private lenders with the business card that are loaning at 12 and 14%, they don't need to be touched. They just want to see the deal. They're a hard money lender. It's more asset based. They may want to meet you once or twice. We're not talking about those guys. We're talking about people who may have never done this before. If they've just met Brady for the first time, do you think they're just going to, "Okay, let me give you $100,000. Not typically going to happen that way. Nothing against Brady, but it just doesn't really play out that way in the real world very often. So these are some places you can find them. Networking events, family members, friends. I'll talk more about family members and friends in a little bit. An IRA, third-party administrators. They're hiding all around us. But should you work with anyone? I say no. So in the beginning, when I first started, when I learned about private money, Quest used to be called Intrust. It was with another company, and they branched out on their own, created their own. And so when I was going to Intrust, I didn't learn about that right away. Previous to that, I was working the phones, meaning calling everybody that I could, going to networking events, just real estate events, and talking to them. And then when I learned about Intrust, I started going there. I started going to Quest events all that time when I learned about them. But here's what I learned. In the beginning, when I first learned about real estate, I was so on fire about real estate. I used to try to tell everybody about real estate. And I used to convince everybody, my parents, family, friends, anybody I would talk to, people at work, about how incredible and how amazing real estate was. I was a real estate investor evangelist, okay? And I was here to preach the gospel of real estate investing and how it was wonderful for everybody. Guess what? It's not. It's not wonderful for everybody. Like, turns out, like, we're kind of weird. Like, they're like, all these people, they're weird. They're real estate investors, and they're like, okay, so we're us, and this makes sense to us, and it makes sense to people it makes sense to, and other people are sitting in Bitcoin workshops right now, and they're talking crypto, and they're wanting to evangelize the world on crypto, and we're like, no, you go do whatever that is. Doesn't make sense to me. So this is what we do. So after a while, I realized, well, maybe this is just my thing, and I need to leave these other people alone. But then I started realizing that there's some people that are predisposed to real estate. So, and that's when I started meeting people at Quest. I started meeting people who had a previous, they had some background in real estate. One of my best lenders was actually an active realtor, but she used to work and own a title company for a short period of time. She understands real estate. She understands real estate. So I started looking for people that I wasn't going to have to go through the whole educational process so that they understood everything about it. If I needed to, if they seemed like they were really genuinely interested and it seemed like a good investment of my time, I absolutely would. We actually just finished, I'll show you guys later, or finishing up a book that's going to hopefully outsource the educational part, where we can just say, hey, read this book. If it seems like a good fit, then let's talk. Rather than having to meet with people, go on phone calls and things like that. So what you want to do is really find people who are predisposed to real estate. They already understand it. It's going to make your life much easier. It's going to make that process much shorter so that you can talk more about deals, like numbers of deals, rather than the 7 fundamentals. Because then before you can even talk about a deal with a new investor who doesn't understand real estate, you really have to train them on the 7 fundamentals so they understand. Like, well, how does this work? How does that? Well, that's this fundamental. That's this. It's a lot of conversations. But if you have someone who's predisposed, it's a matter of like, hey, you meet them at a networking event. Maybe you meet again. Me and Brady were talking, and he's starting to come to Quest meetings now. And I'm like, sometimes it takes someone to see your face 2 or 3 times. You guys have probably had experience. You've all had experiences like this. Maybe at a big company and you see somebody 2 or 3 times. Hey, let's talk. Or maybe someone like at church or the shopping, at the supermarket, the grocery store. My 3-year-old calls it the supermarket. Let's go to the supermarket. So you see somebody and then you start having a conversation. That's how relationships happen. So this is relationships. So sometimes it takes a few times of seeing each other and talking and things like that. So, and then you get to have these conversations. I will only borrow from people where we maintain control, non-negotiable. We're the real estate investor, they're the lender, we maintain control, period. Looking for people for low risk. Why do I say that? Because we want to borrow at the lowest rates possible. 6, 7, 8, 9, 10%, which is viewed as lower risk. People are wanting, that are okay with higher risk, are wanting what? A higher return. Okay? So when I lend, I'm okay with higher risk. When I'm acting as a lender, because I would love to loan to first-time, like newbie investors, because why? Technically it's a higher risk. I can loan at a higher rate. I can loan at 13 or 14% in 2 or 3 points because I understand the real estate. I'm okay if something happens with that deal and taking it back. And I'm pretty good at looking over their shoulders because I don't want that to happen. So I can make sure if they have a good game plan, they've got a good deal, they've got a good system and structure in place. But yep, glad to lend to you. Make sense? But some of these lenders, the last thing they ever want is to take a house back. So therefore, they're looking for low risk and reasonable returns. Reasonable returns. Makes sense? So this is the avatar. This is who we're looking for. So one of the things that's really going to help you, one of the things that's really going to help you as you go into these conversations is your confidence. Absolutely, your confidence is going to be critical. So here's another little story. Is when I began raising private money, that 2009, really the first year of raising private money exclusively, I told you the conversation I had with my wife, and I was really nervous. As I began, having lenders who wanted to invest with me, and I was still nervous, and I was going to these conversations, and I still, I was nervous going into the conversations. I lacked confidence, and I was still getting people that trusted me, and they were still investing with me. But I'm like, man, I just felt like nervousness going into them. And it was just from a lack of certainty and a lack of confidence in what I was doing. And the reason why was I was viewing myself as a borrower, and more so of kind of like a beggar. Okay, I had a negative view of myself. I'm like, man, I'm asking this person to borrow money, so I kind of felt like a victim. And I just had a really poor, image of myself. So, later 2009 sometime, I don't exactly remember, but one of my first partners from 2008 called me. You see, before we partnered in 2008, what did she do with all her money in the stock market? She pulled it out. Beginning of 2008. She pulled it out and invested with me when we partnered. Okay? She called me probably about one of the deals I don't even remember, and I don't remember the exact conversation, but she said something to the effect, she was very appreciative, and she was like, I was looking at how much money I pulled out, and she didn't pull it all out, unfortunately. She was like, so I was looking at how much I pulled out to invest with you, and I was looking at where I would be right now if I had left it in there, and it would be devastating to me. She's like, I'm so thankful that I invested with you and pulled that money out. So I got goosebumps. I still get them now. Then the light bulb went off over my head. And the conversation that I basically had with myself, I'm like, damn it, Brant, this is where it changed from just me. It's everything changed for me. It's not only can I buy as many houses as I want to buy, I need to buy more houses. The more houses that I buy means the more money that my investors are going to get to invest and deploy. Does that make sense? Everything changed for me. It was no longer this scarcity. Oh, I can only buy this amount of houses. Oh, I'm this borrower, I'm this beggar. It's no. This is how I provide value. The more houses that I buy, the more lenders that I help. My business has become, I don't know, was it 301c or whatever? My business has become a way to help other people at the same time. So I didn't really get it. That's when the light bulb just went off for me. It's like, this is not about being a borrower at all. Like, I stopped viewing myself like that. I started viewing myself like this. I have an amazing, incredible investment opportunity for people in my community. People to earn above average market rates of return. And I like to put it like that rather than say 10 or 12%, put a number on it. You can earn above market rates of return, secured by a piece of real estate with a substantial amount of equity. So they're earning above market rates of return, secured by a piece of real estate with at least 25% of equity in the event anything happens. And then you get into the whole social side of investing. The whole social side of investing. Backyard investing, I also call it. Where was their money going whenever it was in the stock market? Who knows? Who knows where that money was invested? Nathan tells a story that when he had money invested in a mutual fund, and he started researching it. He said, I want to find out where my money is invested in. So one of the companies his money was invested in was where? With Osama bin Laden Construction Company. That's where his money was invested with. We all know about the Bernie Madoff scandal. We all know about Enron. We all know about all this stuff that happens on Wall Street and sometimes right in Houston. But when people, essentially, this is the conversation of Wall Street versus Main Street, this is what we give them. We give them Main Street. We give them social investing. While at the same time, our rates of return are typically better. We offer them security, secured by the real estate, a solid piece of Texas real estate. What kind of security are they getting on Wall Street? And then you add in the social aspects, that their investment is going into their backyard, into their community, to buy a house, someone's home. At the same time, employing contractors, helping to employ all the people at our company or whatever company that they're investing with, buying materials from local lumber yards or granite yards or mulch stores or whatever it is. It's social community investing at the same time. So the feel-good aspect of it is amazing. Like, tell me where else you can find that. Like, tell me where else you can find that. Anyone. Nobody say Bitcoin, please. So that's like, I want y'all to get that. It's powerful. It's change. Whenever you start to believe it and you see yourself that way in here, that's when you can execute it out there. Because thoughts become things. And if your thought is like, oh, I'm a borrower, they're probably looking down on me, I'm such a victim, I should have more money, hopefully, can you be nice to me and loan me this money? And if that's the story you're saying, guess what they're picking up on? They're like my dogs and they're going to bite you. Like we talked about yesterday, they're just sensing like uncertainty, like, oh, I don't know what this is, I want to bite this guy and I don't know why. Just like my dogs. But when you sense like, no, like I have an amazing investment opportunity, for people in my community where you can earn above market rates of return, secured by a piece of real estate, invested in your local community, hiring that employs local trades and buys materials from local lumber yards, secured by this piece of real estate with equity. We're not paying 100% for real estate. It's with the discount. And then you get in like, the fact of the matter is, everybody wants to be a real estate investor. partially in thanks to Armando, partially in thanks to HGTV and all these shows, everybody wants to be a real estate investor until they really know the rest of the story. So at the same time, that's when we say they can truly invest in real estate passively through us. And they're investing in real estate, so they're like, they get to be a part of the game, part of the story. I have one lender that they're like, they see what we make. They've seen HUD statements. They ventured out to go do a deal on their own. They bought a fourplex and bought it, got it rehabbed, rented. 30 days, maybe 60 days later, and they rehabbed it nice. Guess what they learned? They didn't like the real estate. So they called me up and said, Brant, we tried doing what you do, and we can't do it. Like, we need to get rid of this house. I'm like, okay, well, she was an agent. I'm like, why don't you just list it and sell it? She's like, can we just loan you the money and you buy it? I'm like, what are you into the deal for? She bought it cheap. Like, I don't know, she bought it cheap. So she was in it for $150,000. And I was like, well, fourplex. I said, well, it's not an area that we buy in, but, you know, if you would finance 100%, actually, she financed $10,000 at closing over. She financed $160,000 at 5% interest just to be done with it. I'm like, well, what were your thoughts? What are you looking to get out of it? She's like, I'm so burned out and stressed out, I'd do it for 5%. What, Brady? Well, how did I respond?
Well, that's not quite the number I was thinking, but we could work.
We can work with that. You're exactly right. And it worked like a charm. So what I want y'all to get, like, I want you to see yourself like that, right? When you go into these conversations of what it is that you're really providing. So some of the rules of raising private money is there's this thing called the SEC. And for you football nuts, I'm not talking about the Southeastern Conference of Football, okay? So I'm talking about the Security Exchange Commission, okay? So we have to be very cautious when we're raising private money. So I do not recommend, you can do whatever you do. So here's what I don't do. We don't publicly advertise on the radio, any other public advertising to raise money. We don't do internet marketing to raise money. We don't advertise in the newspaper to raise money. We don't pursue people out of our state. The rules are different in each state. So, listen to what I said, though. I said we don't do internet marketing to raise money. We do one form of marketing on the internet. Can anyone guess what that is besides Jimmy? No. Well, we do that. Yeah. But I'm talking about private money. There's something that you can do on the internet, and there's something you can do on the radio, and there's something you do with public advertising. You can educate people. There's no rule saying you can't educate people. So we educate people about an opportunity that exists in the marketplace. It's called private lending. Becoming a real estate note investor, okay, being a private mortgage lender. So we explain about this opportunity that exists. We explain how it works. Give them, here's an example deal of what it would look like, and just give them some information. Here's a free download report where you can get more information about it. And that's all that we do. If you'd like to contact us, here's our information. Like to have a conversation. There's no promotion of that we offer or promise to do anything. We never use words like safe. We never say guaranteed. Any of that stuff. Why? Because there's no investment that's safe. Nothing in this world is guaranteed. Sounds familiar.
He was in jail for 15 years for securities for promising returns on notes.
Well, yeah, but that's my point. We don't say those types of things because we can't back those types of things, and those things are violations. We say secured by real estate. We can say that, right? We can say above market rates of return. We can say things like that. So there's things that we can say, but really we educate people. I'm going to show a couple other things that we do in just a minute. But it's okay to educate people as long as you're not making any promise statements, and you're not making specific, explicit advertisements to raise money. So what are your private money rules? What are your guidelines? Do you have a loan minimum? Is it $10,000, $20,000? Like, what is your minimum? Accrued or paid interest. Most lenders are going to want to be paid interest. It's really in their best benefit that they are paid interest. I think Nathan will talk about that tomorrow. One lender per lien. We only allow one lender per lien. Does that mean that we don't borrow with second liens? We do. But the rule is one lender, one lien. Meaning, if one lender comes and says they have $50,000 and another lender says they have $20,000, we don't combine them into a lien so that they're on the lien together, right? We don't do that. So we would do a first lien for $50,000 and a second lien for $20,000. And we do that a lot for the same property. As long as what? The LTV numbers still match, or still meet our criteria. We don't exceed the LTV just because we have multiple liens. You could do that with 3, 4, 5, or 6 liens, as long as you don't exceed that criteria. And if you're paying for an attorney to do all those documents, it's going to add up pretty quick, all right? One exception to this, and I don't want to confuse you guys too much though, is that with IRA holders, a lot of times we'll have 4, 5, or 6, 10. We closed a loan like 2 weeks ago, and there were 10 IRA accounts from the family I told you about earlier. They all contributed different amounts to a loan to us for like $225,000. That was one lien. Does that make sense? Different account holders. Now, if these two guys are buds and they come to me and say, hey, we're friends, we've got $70,000 together that we're loaning to me as one lien, I would be okay with that. I'm just not partnering up strangers on the same lien, because if something were to happen to me, or if I die, or if I'm Bernie Madoff, now they're fighting something together. You see what I'm saying? So I don't do that to my lenders. I will never do it. First, one lender, one lien is the rule. Your LTV ratio, we've already discussed that. Stick to your guns. Say, this is my ratio. 75, never exceed 75% LTV on rentals or flips. Maybe you do slightly on rentals, whatever it may be. Establish your ratios. And we talked about equity participation. What are you looking for? What are you seeking? These are questions that can come up from potential lenders, so be able to answer what your rules are. Because they may say, well, what do you do about this? How do you feel about second liens? What, do you typically pay points? What are your rules? Like, be confident with it. Well, typically we do this. Typically we do that. So know what your rules are. Know what your guidelines are. So this is a copy, or not a copy. This is a screenshot of our website, the Houston Capital Group.com, if you want to take a look at it. But I think that's what it says. Most investors will never know how easy it is to earn double-digit returns while restoring communities, build assets, and changing lives, et cetera, et cetera. So we have just some basic information, not a lot. We even have a disclosure on there where it discloses all the risks. Essentially says, this is dangerous. Deals go bad. We could be crooks. Be careful. Get educated. All that kind of stuff. We either have them, we get their signature. We haven't always done this. We've started getting their signature, or we require documentation that they're an accredited investor. And that's really what we're seeking now, are accredited investors. a document that says they're an accredited investor. Remind me to send you the link. Oh, I've got it on here. There's actually a website that that Joe, my billing person, she sends to all of our lenders now. That we don't require that it come from this website. We just need some type of document. They can get this sometimes from their CPA or their accountant. And this website is, if you guys want to jot it down, verifyinvestor.com. And it costs like $50, verifyinvestor.com. And that basically prints out a certificate. They enter their financials and it says, yep, I'm a legit accredited investor. Hey, Kara, can I get my charger for this computer? It's about to die. So another thing that we did on this website, oh, this is an old screenshot. You'll have to take my word for it. If you go to Houston Capital Group, you want to check it out. There's a link that does this talk. It's basically an application, like to get more information. If they want to apply, they can apply. So whenever they apply to invest, like there's a link, someone reaches out, hey, I'm interested in this, I read about it, like I want to know more about your company. So we asked them to apply to invest. This is what I was telling you earlier, I'm like, wait for the presentation. I'm gonna show you something what we've done that psychologically I think's kind of changed the game. So think about it for a second. Years ago, we started looking at our competition. When we were going to events, we're in a room full of other real estate investors who are all trying to do what? Raise money. So we'd go to these pitch a deal events and guys would be up there with their paper like, I got this deal and I'll pay 12 and 14%. You know, I need to close quick, all this urgency stuff, not really putting out good vibes, in my opinion, to a lot of lenders. So when we would go into conversations, we would go to the front of the room if we were speaking from the front of the room, and still do, with much more subtle approach. You know, hi, my name is Brant. You know, I'm with Invest Home Pro is the name of my main company. You know, we purchase undervalued real estate in blue collar working class communities, typically with 25 to 30% equity after we purchase the property and repair it. We primarily finance our business with private lenders, private mortgage lenders, with people just like yourself who are interested in earning above market rates of return with an asset that's secured by the real estate that we're purchasing in our communities. If you'd be interested in learning more, I'd be glad to contact you or be glad to speak with you, and that's it. So that's our pitch versus, I've got this deal, I need to close, a lot of urgency. So that worked really well. Then we began establishing credibility online. We talked a little bit about that yesterday, how important your online reputation is, where people go now to research about you and your company. So when they go online and look for information, what do they find? They find education. They don't find a sales pitch. They don't look for us promising anything. We're just trying to give them some information so that they can make a decision. Just how we treat our sellers, right? Like when we go to a sales call to buy someone's house, we're not trying to beat them over the head to sell their house to us. We don't want to work with people. Like I wouldn't feel good beating someone over the head or just like really trying to hardcore press them and close them to sell their house to me. Just like with coaching and mentoring, or like Mitch said, I don't want to work with anybody who doesn't want to work with us. It's win-win. So we educate sellers. Here's the pie chart. Here's what it looks like. Same thing with our lenders. Here's some information. If this looks like something you're interested in, I'd be glad to have a conversation with you. But what we added was this, where we added a link where if a lender comes to us now, we do make them send us an application. We ask for some information. We make them fill out a form, learn a little bit about them, find out how much they're looking to invest, what rate of return they're seeking. Are they looking for short-term, long-term loans, kind of high-risk, low-risk type of questions? Is it cash? Is it self-directed IRA? So it helps us immediately screen them without having a conversation or meeting to find if they're in an ideal type of investor. But also, what does that do for our lender psychologically? All of our competition's begging them, I need to borrow your money. There's a lot of urgency versus, well, Brant, these guys are, I've got to apply to invest with them. It just gives your lenders, it puts us more of in an authority, celebrity type of role, right? It puts us head and shoulders above our competition. Because if they've got to apply or fill out a form to even invest with us, that already sets off the relationship in a much more firm foundation where they feel really good about working with us. Does that make sense? So these are one of the things we were talking earlier about. Daryl mentioned, about the software thing. I'm like, some of these things, guys, like, this is what I'm talking about from yesterday. When you really just enthrall yourself in your work and you embrace the work and you just like dig deep into your business, like, this is the fun stuff where you just come up with, and it's like, this is the 10,000 hour rule, and this is where business becomes fun, and we create just these little things, little ideas, brainstorming sessions, masterminds. Sometimes they come up in our coaching sessions like, holy crap, that's a good idea. And we just integrate these little things little by little into our business. I'll share another one that I had in a little while. So that's a disclosure statement that we give to them. The process is as simple as this, so you don't want to overthink it. You find a house. You contract a property, you purchase it with your lender, private docs, you renovate it, you sell it, lease it, refinance it, and then you find another house. Your lender recycles their money. This is something I put together for a private lender presentation, so I'll let y'all take a look at that. This is the process, how it goes. You find a deal, you meet with the borrower and lender discuss the deal, the rates, and the terms. Now, in between the deal and your initial meeting and you agreeing on terms, what may be happening in here? Touches, right? Calls, conversations, meetings, website. And that's something that we do provide for our Wealth Passage students, is their own credibility site for private lenders to establish that immediate authority. So the lender and borrower agree on terms, sent to the attorney for document preparation, preferably we have 2 attorneys that we use, and we provide access to our students for both real estate attorneys. One specializes in IRA loan documentation. She's a lender's attorney. She specializes in IRAs on drawing documents up for lenders. She's my attorney. Why do you think we do that? She's good, but I'm putting my lender's interest ahead of my own. I know Mitch mentioned he doesn't do he mentioned non-recourse loans, right? That means his lenders can't come after him. I provide a personal guarantee to my lenders saying, you can come after me and you should come after me. So that's what we do. That's how our business is structured. That's how I treat this aspect of the business. Very, very important. I'm giving my lenders, you talk about in the sales and marketing world, as an entrepreneur, we want to create for our clients or potential customers an irresistible offer. When you create an offer that's so irresistible, how can they say no? So that's really our approach. That's how we teach our students to raise money. You create the irresistible offer. Even our loan documents are written up in your favor. And we provide a personal guarantee. And we get an entirely separate title policy just for you, the lender, in and above our own title policy. It doesn't really cost much either. It's an add-on. It's very inexpensive if you're already getting a title policy. If you're only getting that one, it'd be expensive. So there's these little things that we do to make them feel really good about investing with us and really being able to sleep like a baby, which means 2 hours, you wake up and cry, and then 2 hours. That's been our experience with baby sleeping. So, all right, so I don't think I'll finish this. So then you go to closing, right? The funding, you do your project renovations, draw inspections, then monthly payments or note servicing, however that's set up. And then you either fix it up, sell it, rent it, refinance it, whatever it is. And you send this money back to your lender. And then they're like banana trees. What do we say about banana trees? They're kind of like gremlins. I don't like to call private lenders gremlins either, but they're kind of like gremlins. And they get angry. They get angry whenever you don't reinvest their money really quickly. So they're more like gremlins than weeds or banana trees, actually. Okay, so remember you're helping. You are helping and serving others. You're creating true win-win partnerships. And if you focus on that, the rest will come easy. I've already talked about SEC violations. Understand your exemptions. There's only a couple that we go with, guys, and this you're gonna learn about, like, filing with the SEC and becoming, like, if you want to become registered for a company. You see, there's companies that advertise online, they advertise on the radio. It's because they're registered with the SEC. Okay, there's a lot of attorney's fees, documentations, and setups, and ongoing requirements that you have to do in order to do that. I don't think anybody in this room needs to do that. If you follow this structure and you utilize two of your big exemptions. One, you work with accredited investors, okay? Two, people that you have established relationships with, you can talk to them. Friends, family, people that at our networking meetings, people who are interested in what it is that you're doing, right? And then it's fine to educate people. So just do those things. Just do those things. Put them in good deals and just perform. You will be fine. I've never heard of anyone getting tracked down for the SEC by borrowing private money and performing and doing what they're supposed to do. Okay? Our friend Armando may have a RICO case against him because he's probably not doing these things he's supposed to be doing. But we do what we're supposed to do. No matter, look, cash, these things apply to me whether we talked about cash. If you use banks or hard money lenders, you're not going to have a choice. But if you're using your own cash, you're working with a private lender, we always close at a title company. Okay, we always close at a title company. We always use an attorney to draw up our loan documents. I talked about we use an attorney who draws those documents up on our lender's behalf in their favor. We include a lender's title policy. That's the additional one I was talking about. Sometimes it's called a mortgagor's title policy. We always provide a survey. We buy the survey. Why do we provide a survey? Did someone ask? Okay. We always provide a survey as a rule. The only exception to that is if the seller has a survey that's fairly new, right? That we can utilize, that the title policy will accept, et cetera, et cetera. If there's any issues, any encroachment issues, we bought a house the other day. It was 4 acres of land. We bought, how big was Carolyn? 3.5 acres? And typically it's not like that. One time in some of your subdivisions, we've had like sheds that go over the line, fence lines that are off, just little things like that. It's 5% of the time we find an issue.
So if you find an encroachment, do you have to correct it or provide some type of remedy for that before the deal closes?
It depends. Yes, it could potentially be a deal killer. It could be. You could find a deal killer with the survey, or you have to. So one issue was that we had a house with an addition, and the addition went over the survey line. So that was a no deal. We had to kill that deal. Typically, you find issues with surveys in your more rural areas or really, really older neighborhoods. Those are where you'll find your issues. Make sure the proper insurance is in place. This is like your fire policy, your dwelling policy. I say never receive checks or cash directly from lenders or partners. What I mean by that is this. We close at a title company. Loan docs are drawn up. We sign. Everything is closed on. We sign all the loan documents, the title commitments. Everything is signed. After everything's signed and closed, approved by your lender, then everything's funded, meaning they wire the money to the title company, and the title company either cuts you a check or wires money to you. The only difference would be is if you have repair draws set up, maybe your lender tells Brady that, hey Brady, I know you want to borrow $30,000. I trust you and all that, but with $30,000 for repairs. Say, I trust you, but I want to set up 3 draws of $10,000. So whenever you do some repairs, send me receipts or a checklist or pictures or whatever y'all agree to, then I'll send you the money. If your lender's holding that repair money just in their account, that's kind of their escrow, then they may release that directly to you. But make sure if there's repair draws that's outlined in the loan documents. And a good attorney will make sure that that's in there. She's going to ask you, what's your repair draw schedule? What's the terms and guidelines of that? Make sense? So the bottom line is this: never let a lack of money stop you from doing a deal. Raising money, it's a mindset, right? Combine it with the skill set. And hey, Kara, can you put the picture of the book on, please? All right, so this is another thing that as I delve through being a real estate entrepreneur, that it's about helping people, right? The more people that you help, essentially the more money that you're going to make, right? And the more, I guess, fruitful you say that your life, your business is going to be. So one of the things too is I enjoy, working with lenders and having these conversations, but there's only so many hours in the day. So one thing, me and Nathan were just masterminding, talking shop like a year ago, where one of these ideas sprang was to write a book really to educate people about what this process is. So I'm not pitching or promoting the book or anything like that, but this is coming out in a couple of months. So check it out if you're interested in learning more about the process, just so that you can have a better conversation with your lenders. And I know that some people that it may be something, say, hey, if this is something that you're interested or you don't feel confident about having the conversation, say, read the Private Lender Playbook, take a look. If that's something you're interested in doing, then give me a call. I remember the old adage, like, fake it till you make it kind of thing. And I remember when I first started raising private money, specifically with Quest clients, that they would ask me questions about some of the processes with Quest. And I didn't have all the answers. I still don't, as long as I've been doing this. I really don't need to know all the ins and outs of how their forms work and all the processes of their system and their online system, et cetera, or all the differences in all the IRA accounts. So rather than guessing, which I wouldn't do that and respond to their question, Or even say, not sure about that. Let me get back to you on that, which would be an appropriate response, and say, how about this? How about we set up a meeting over at Quest with one of their account reps so we can sit down and go over all your questions so you can fully understand this. So that's what I used to do. And we'd go to their conference room, sit down with my lender, someone from their office. They'd ask all their questions, and I would listen or check my email or whatever, and that would be it. So that's kind of what the private lender playbook is for, is educating lenders about this process. So why? So we can cherry pick the good ones. Oh, you read the book? It's something you're interested in? Great. I give them a book. They read the book, say, hey, if you're interested, read this. They never call back. Guess what? Probably not a good fit. That's okay. We also cover some rules, some guidelines in the book for borrowers, because we know borrowers, investors are going to read the book too. It's like, hey, this is kind of how you should act and behave in this process to really take care of these guys. And then also, because we want this to be win-win. I've heard enough horror stories from private lenders to know that that's not fun. That if that ever happened to me, I wouldn't want to be in that position. I'm not going to put myself in that position, but if it happened to my parents or friends just because of lack of education, it's not good, and it doesn't have to be that way with a little bit of education. So that's what this is all about, just helping people understand it more about what this process is and how awesome it is. So I just wanted to share that with you guys.